So whether you just opened up your LLC or you've had your LLC now for a couple of months or even a couple of years, in this video, I am going to share with you how I set up all of my business bank accounts from when I made my first $100,000 all the way until we were at about $750,000, not in revenue, in actual cash collected in our business. And if you stay to the end, I'll let you know some changes that I maybe would have made a little bit earlier on in a recent change that I did to one of my accounts. So before diving into the first account, I want to preface that the way that I set this up, and again, this is going to vary depending on the type of bank that you have, is I went in person to the bank. I told my banker exactly how I wanted my accounts laid out. So when I'm breaking down all of these accounts, I'm not saying to go to 5 or 6 different banks and have all of these accounts. I'm talking about these are kind of like subcategories within the main head account. And so with that out of the way, the first account that I opened up was my revenue accounts. Now, I want you to think of your revenue accounts kind of like the head honcho. This is the main account where all of the funds are going to come in through. So whether you are using a merchant processor directly with your bank, which I recommend for you to set up because it's going to help build trust with that bank. That's a little pro tip for you. You can also set it up if maybe you have a Stripe account or if you have another merchant processor that's maybe a third party. Whether it's $1 going in through that merchant account or it's $1,000 coming in daily, it's all flowing right into that revenue account. Now, the whole point of this, especially if you're under $250,000, is to keep it as simple as possible. There's some people out there that they'll say, well, hey, you may want to separate an operational account or you may want to have a payroll account. I think that especially when you're starting off, or at least when you're under that $250,000 mark, you can go ahead and let it flow right through the revenue account. Now, again, this isn't tax advice. I'm just sharing with you what's worked for me and what I'm still using today. So if you're wondering how are expenses paid for, it's all getting paid from this same account. But the way that I reverse engineered it was I pretty much set up all of my expenses. Take a look at all of the apps or maybe services that you use to keep your business afloat. You're going to tally that up. And the way that I set it up was I used a business credit card for each of them. Now you can put them all on a business credit card, but the key is that you just want to have it going on an automatic payment cycle. So that way you're not paying crazy interest and you're not missing any payments. So this is also going to help you out with the business credit side if you do decide to apply for a business line of credit later on with this particular bank, or if you decide to maybe apply for a business credit card that you don't already have. So things like your operational costs, things like your recurring costs, or any other payments that are needed to be made in order for you to keep your business afloat, it's all coming from this revenue account. Now, the second account that you should set up with your LLC is going to be your savings account. Now, there's a few different angles that you can take with this. I'm again going to keep it as simple as possible. With the savings account, this is what you're going to use for things like emergencies. Now, everyone is going to have their own threshold or really their own amount that they want to save in terms of how much is coming in and how much I want to throw into my savings or into my emergency. That's going to depend off of you. In my experience, what I would do is any excess revenue that I would have after maybe saving on taxes, which we'll get into here in just a second, and after paying off my team or my suppliers or expenses, all of those excess funds would naturally flow right into the savings account. Now, again, especially when you're starting off, you want to be able to sleep at night. There's nothing like having a reserve there. So God forbid something happens, you have 30 days covered, you have 60 days covered, you have 90 days covered, especially if you're operating in quarters or if maybe you have bigger contracts that maybe it's a longer sales cycle and it takes a little bit longer for you to receive those funds or for you to receive that payout. Having that extra cushion allows you to, again, be able to make the right decisions where you're not feeling rushed or you're not feeling like you're under the gun in order to be able to come up with some quick cash because you have that reserve there just in case. Now, I hope you're enjoying the content, but really quickly, I wanted to let you know that if you are a business owner and you are looking to get access to business credit, whether you are looking to restructure your existing business or potentially you're rebuilding your business from scratch, we can help you, again, rebuild your business, restructure it, and help you get access to business credit so that you can continue to scale your operations. If that's something you're looking to do, go ahead, hit the link below, insightInnerCircle.com. Check out what we have going on and book a free demo so that we can see where you're at, see where you're looking to go, and hopefully help you get there. Now, the third account that I would have in place would be the tax account. Now, everyone is going to maybe break this one down a little bit differently in terms of how much should be flowing into your tax account. I'll give you a good rule of thumb that my CPA gave me. And again, this is all going to depend off of your tax bracket, your married situation, how much revenue you're bringing in, and where you're located in the country. So again, talk to your CPA about this, but my CPA mentioned, hey, you want to have anywhere between 20 to 30% flowing into this account. So that way it's kind of like a set it and forget it method. I've never had a situation that when tax season came around, I was kind of wondering, okay, where's the money going to come from? At least early on I did. But as I started kind of figuring this thing out and we started to scale, I started thinking, man, the last thing that I want to worry about is come tax season. Or if you're paying your taxes every quarter, especially as a small business owner, with the payments, like that money's there. So you don't have to worry about where it's going to come from or trying to borrow from someone. Like that's the worst situation that you can be in. So rather than having to go through that, set aside, again, gonna vary, but 20 to 30% that you have flowing right into that tax account. And then the fourth account, which is my personal favorite because this is where things can get creative. This is where you are kind of going to pay yourself to learn, is going to be the reinvesting and the experiments account. So I first want to address the reinvesting account. The reinvesting account is exactly what it sounds like. If maybe you wanted to go out and you wanted to pay for more marketing supplies, if you had ads that you wanted to run, if maybe you had merch that you wanted to maybe figure out a few different designs before you bring it out into the market. Maybe you wanted to beta test it. Maybe you can dive into this reinvesting account to see if you have a winner, to then go back into your operation account, which again is the top line, that revenue account, to then throw more dollars behind it at scale. Now, the other side is going to be your experimenting account. The way that I see this, I'm kind of giving myself a budget to fail. Here's what I mean. Let's say that every month I'm giving myself $2,000 in order for me to be able to experiment. So every month, $2,000 comes into this account. I can use it for whatever I want in regards to what I want to do with the business. So if I'm testing a new ad, I can go ahead and just say, okay, these $2,000, it's just to experiment. It's just to find out if my thesis works. It's just to find out if my theory is actually going to move the needle or not. So with this account, you're okay with losing that money, but I'm even scared of saying losing that money because it's really not losing that money. It's kind of like, again, you're paying yourself to learn a lesson. You can also use it for things like courses, to hire a coach, to maybe get yourself in a program to help accelerate that learning curve. But the whole point of this account, again, is to keep things fun in your business. And this is really where you're going to start seeing the biggest gains, at least that I've seen in my own business, especially once you start making more money, where now it's not just $2,000 that you can maybe experiment with. Now it's maybe $3K, $5K if maybe you're a bigger player. Maybe it's $30 or $40K once you start hiring talent. Now, the bonus account that I wanted to give you, which again, it's one that you will probably transition to, especially as you start to grow your business, is going to be a payroll account. Now, I've been seeing this more and more, especially once business owners, and again, this will range, but once they get over that $250,000, $300,000 mark, they have a payroll account that's connected to their payroll software. So whether that's Gusto or if that's maybe QuickBooks. And so anything that's drafted from that account comes directly from the payroll account that you're constantly funding. This also helps it look cleaner with bookkeeping. So again, CPAs love the more organized you are, the easier it is for them to be able to help you out with things like write-offs and deductions. And so the whole point of this video is to make sure that you're able to properly separate everything in your business, so that way everything's in one track and you're able to find everything exactly where it is. So again, if you found value in this content today, consider hitting the subscribe button down below. Don't forget that anytime we're not posting on here, we're posting over on Insight with Irv, which is our podcast channel. So if you like what we have going on over here, you'll also enjoy what we have going on over there. But other than that, I appreciate you guys checking me out. Until next time, everyone, I will see you in the next video.